All right, Greg here from Tag Economy, and today we're going to be talking about how the U.S. debt problem is soon going to cause a global economic crisis, and it's almost unavoidable. And I really don't understand why more people are not talking about this right now. The debt problem we currently have is absolutely spiraling out of control, and I'm going to show you how bad it is and also talk about the ramifications it's going to have on the global economy. First off, it took about 200 years for the U.S. to get $1 trillion in national debt. You can see 1982 is when we finally hit the $1 trillion in debt mark. And more than half of that trillion came from the previous 10 years when we were taken off the gold standard by President Nixon in 1971. You can see in 1971 when that happened, we were only at about $400 billion in debt. And almost all of that $1 trillion in debt in 200 years happened after the creation of the Federal Reserve in 1913. How convenient. As you can see from this image, we had less than $3 billion in national debt in 1913 when the Federal Reserve was created. If you aren't aware, the Federal Reserve and fractional reserve banking is probably one of the biggest scams that's ever happened to our country. And they are destroying our economy. Actually, you know what? That's not even accurate because they've already destroyed it. Our economy is destroyed. There is no coming back. And I'm going to show you why it's impossible for us to come back from this. Well, virtually impossible. It's not a matter of if a global economic catastrophe happens, but when. So it took over 200 years to create that first $1 trillion in debt. Well, let me give you a new stat. The latest $1 trillion in national debt happened in just 3 months. You can see here on June 16th, 2023, we hit $32 trillion in national debt. Then on September 19th, 2023, 3 months and 3 days later, we hit $33 trillion in national debt. So $1 trillion of debt in just 3 months. But it gets worse. So the day I'm shooting this, it's October 9th, 2023. I'm currently on the site usdebtclock.org, and you can see our national debt is already over $33.5 trillion. That's another $500 billion in debt in less than 3 weeks. And if you go to usdebtclock.org live, you're going to see that number is higher. The number will not go down, it's only going to keep growing. So why is this such a big deal? Well, this is a big list, but I'm going to start with some of the big areas. Let's start with interest payments first. As the debt increases, so does the amount the government must pay in interest. These payments take up a larger portion of the federal budget, leaving less money available for other spending priorities. Here's a breakdown of our current government spending. You can see that interest payments currently take up 11% of our total government spending. As the debt goes up, especially with higher interest rates, that number is only going to keep getting bigger. Within a year or so, interest payments are going to go from our 6th highest expense to our 3rd highest expense. That means we will be spending more on interest than income security, Medicare, and national defense. Within a couple years, it's going to be our 2nd highest expense, surpassing even health. And within about 5 years or so, it's likely going to be our number 1 expense, surpassing Social Security. This means we'll be spending most of our tax money simply on interest payments. This is part of the reason why debt is rising at an exponential rate, and it's why it just keeps growing faster and faster. Reason number 2 this is such a big deal. Higher debt means higher government borrowing, which generally leads to higher interest rates, of course, which we are seeing right now. This potentially discourages private sector investments, which is crucial for economic growth and job creation. Reason number 3. High debt levels can limit the government's abilities to invest in critical areas like infrastructure, education, and healthcare, among other things, of course. I know. Everyone thinks the U.S. is invisible and we will always have the best infrastructures and the best education and the best healthcare, the best everything, right? Well, that is soon not going to be possible. Reason number 4, inflation. Inflation is way above the target rate of 2% already. Last I saw, it was at 3.7%, and this is the adjusted inflation number. If you look at this screenshot from shadowstats.com, you can see that if they still measured the CPI the way they did in 1980, inflation would be near 8%. Yeah, they switched the way they calculated it. How convenient. Yet, it's still at almost 4%, double the target rate. And the 4 things I just listed are just the tip of the iceberg and all have domino effects on hundreds of other issues. So, how do we fix this? Well, Unfortunately, I'm not sure it's possible. Not without a total collapse, where a lot of people are going to lose a lot of money. So here's a breakdown of our spending, and I put in estimates for how much we are spending on each based off the spending number being 7 trillion, which I know is a little high. I think it's more like 6.3 trillion, but this is just to show how much trouble we're in. The federal deficit is going to be about $2 trillion this year. That means we're going to spend 2 trillion more than we actually have. And generally that number is going to keep growing, especially with interest rates rising and likely staying high for quite a while. If they lower the interest rates, inflation is going to surge even more, so that's not really an option. So looking at this breakdown, where are we going to cut $2 trillion? National defense won't be cut. I can pretty much tell you that right off the bat. Social Security reserves are going to be running out in about 10 years or so you can't really cut much there. Health and Medicare, you can cut, but that's just going to cover more debt issues down the road. So good luck cutting those. Not only can you not cut the net interest, but that number is actually going to keep growing as we talked about earlier. So the outcome, well, there's really no way out. The can has been kicked too long down the road. So we've raised the federal debt limit 78 times, or the debt ceiling. So basically, we set a debt limit, we reached it, and we re-raise it, or kick the can down the road. Here's the problem with that. Every time we did that, we make the problem a little worse. And now we are at a point where it's 78 times worse than it would have been if we just dealt with it earlier. So I want to finish this off by showing you a drawing of exactly what's happened here since the Federal Reserve was created in 1913 and exactly what we're doing. Well, when we started in 1913, we did this, right? We took a step up and we're here, right? So this is us right here on the first step. This is the first time we raised the ceiling. If we jumped here, it wouldn't be a big fall, but we're like, it's not that high, so I don't really need to make this jump right now. We can go a little higher, right? So then what happens is we go a little higher, right? So it goes to the next step. Well, every time we do that, we can't go down, right? We can't go back down. We have to jump off this way. So we get here, we're like, it's still not too high. We can go up another level, so we go up again. Now we get here, and we're like, okay, well, it's kind of far. If we jump, we're going to get hurt a little bit, so let's just get rid of that. Let's just go up another one, right? So we're up here now. We're up 4 times. We're here, we're like, okay, it's going to hurt even more if we fall. I might actually hurt my, get some bruising or something. So let's just go up, right? Up here, well, shoot, man, if I jump now, I might actually sprain something. So let's go up, right? Remember, we can't go back down. That's not an option. So we're up here now. We've raised 7 times or so. Man, if I jump now, I might break my foot or something. Let's go up. I don't want to break my foot. So we go up. Well, here, if I jump, I might actually break my leg. Let's go up. All right, well now, shoot, I might not just break my leg, I might break my back. Go up, right? So we keep doing this. Okay, well that fall's really going to hurt, so let's just go up. The problem is, as you can see from this, we're way up here, way up off the screen. We've raised 78 times. If we jump, what's going to happen? Likely we're going to break every single bone in our body, or we're going to die, and that's going to be the collapse. So what's coming is not going to be pretty for most people. Hopefully you are one of the few that can take advantage of what is on the way. Some of the richest people in the world, like Warren Buffett and Ray Dalio and tons of others, agree on the fact that people should be running from the dollar. Tim and I agree 100%, and you can find out more about what we believe in the description below. Make sure you like this video as it helps the YouTube algorithm and helps get this information to more people. Also, make sure you subscribe as we have multiple videos dropping a week. See you soon.